Palantir stock is on fire, there's no denying it. After a remarkable run over the past year, PLTR has now hit fresh all-time highs, closing out the week around $154 per share. With earnings coming up this Monday, August 4th, the stakes couldn't be higher. Will Palantir justify the hype with another strong quarter? Or are we looking at a classic case of a stock priced for perfection, where even good results might not be enough? Today's video is all about expectations, what Wall Street wants to see, what could go right, and what could go wrong. If you hold Palantir, are thinking of buying in, or are just curious how far this AI-powered rocket ship can fly, you're in the right place. Let's dig in. To understand why this earnings report matters so much, we have to step back and look at how far Palantir has come. Since the beginning of 2024, PLTR has more than doubled in value. Year to date, the stock is up over 110%. That kind of move demands attention. It's now the top-performing stock in the S&P 500 for 2025 so far. And it's not just retail momentum, institutions are loading up as well. Analysts, once skeptical, have started changing their tune. Loop Capital recently raised their price target to $178. Mizuho, a longtime bear, upgraded the stock from underperform to neutral, citing stronger-than-expected commercial momentum and potential revenue acceleration. So yes, there's a lot of optimism baked into the stock. But that also means the bar is high heading into earnings. Palantir is scheduled to report its Q2 earnings after the market closes on Monday, August 4th. Here's what Wall Street is expecting. Revenue around $939 to $940 million. Earnings per share of roughly 14 cents. Year-over-year growth of about 38 to 39% for revenue and 55% for EPS. If they hit those numbers, or beat them, investors will likely feel justified in pushing the stock higher. But even a minor miss could lead to a significant pullback, simply because expectations are so elevated right now. Let's start with the bull case, because there's plenty to be excited about. One of the biggest recent developments is Palantir's deepening relationship with the U.S. Army. A new initiative aims to consolidate as much as $10 billion in contracts under a single enterprise agreement. According to reports, this could boost Palantir's Army revenue from $400 million annually to $600 million over the next 2 years. That's massive. It would streamline procurement, increase Palantir's operational footprint, and help solidify its position as the go-to AI partner for national defense. Meanwhile, the company's artificial intelligence platform, or AIP, is gaining serious traction in the commercial space. Palantir's AIP bootcamps allow companies to get hands-on experience with their tools in just 5 days. This onboarding method has proven incredibly effective, accelerating adoption across healthcare, manufacturing, logistics, and financial services. There's also the partnership with xAI, Elon Musk's AI company, which has integrated Palantir's back-end capabilities with Grok, its conversational chatbot. And let's not forget Palantir's work with the U.S. Navy on the Warp Speed for Warships program, a high-visibility initiative to modernize military ship production with real-time data analytics. So, if Palantir can show clear growth in both its government and commercial segments, while demonstrating margin expansion and solid forward guidance, the stock could very well extend its rally. But let's balance the optimism with realism, because risks are very real here. First and foremost, valuation. Palantir is trading at one of the highest multiples in the entire market. Forward enterprise value to sales sits near 100 times projected 2025 revenue. That's a sky-high valuation, even by high-growth tech standards. This means the market is expecting flawless execution quarter after quarter. Even a modest miss on revenue, margins, or forward guidance could cause the stock to stumble. We've seen this pattern before in other high-flying AI names. Second, while the commercial business is growing, there are still questions about how scalable it is in the long run. Can Palantir maintain the same pace of onboarding new clients quarter after quarter? Are enterprise clients converting from pilot programs to long-term contracts fast enough to support continued growth? Third, the company still doesn't fully disclose pricing models for AIP and some of its other products. That lack of transparency can spook investors who want to better model future revenues and margins. And finally, there's the macro environment. The tech sector has had an incredible run, but broader market conditions remain volatile. Inflation, rising interest rates, and global uncertainty could all contribute to a shift in sentiment, especially for richly valued growth stocks like PLTR. So as we head into earnings, here's what I'll be paying attention to. Top-line growth. Do they beat the $940 million revenue expectation? Commercial bookings. How fast is AIP being adopted across industries? Operating margins. Are they expanding or compressing under scale? Government contract updates. Any clarity on the $10 billion Army deal? Forward guidance. This one is critical. The market wants to see acceleration into Q3 and beyond. Even if the numbers look great on the surface, it'll be the tone and language during the earnings call that gives us the real insight into how management views the rest of 2025. So, where do I stand? I'm cautiously optimistic. I've held PLTR for years and have seen their ups and downs. But what we're seeing now is different. The company is profitable. It's growing. And more importantly, it's executing. They're not just riding the AI hype, they're delivering real-world solutions, landing billion-dollar contracts, and expanding their commercial reach. That's the kind of foundation I like to see as a long-term investor. But I'm also aware that no stock goes up in a straight line. At these valuations, volatility is inevitable. If you're holding or considering a new position, it's worth asking yourself, am I investing for the next earnings report, or the next 5 years? To wrap this up, Palantir is heading into one of its most important earnings reports ever. The company is sitting at all-time highs, investor confidence is strong, and Wall Street is starting to take notice. If Palantir delivers on expectations, and especially if it raises guidance, there's a very real chance we see the stock push even higher. But if growth slows or guidance underwhelms, the stock could quickly retreat to the $125 support zone. That's the risk-reward dynamic at play. Thanks for watching. If you found this video helpful, please give it a like and subscribe for more content like this. Drop a comment below. Are you holding PLTR into earnings, or are you waiting to see what happens Monday? Until next time, stay informed, stay focused, and I'll see you after the earnings call.